and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the law.
Hi, thanks so much for joining in. You're watching Ask Profit on NDTV Profit. My name is Alex Matthew. With me is Mahima Vachrajani, and we'll take you through the next 1 hour of trade. Winding down to the end of the year, Mahima, what have you got planned?
Oh, something very interesting planned, but it's a secret that I won't share.
I will ask you later. But
yeah.
Compliments of the season from all of us at NDTV Profit to you. Of course, this trading week is curtailed on account of the midweek market holiday, and quite a few of you, I'm sure, are already in party mode heading into the end of the year. At least today you have the Nifty 50 that's trading with gains of about 0.7% or 0.8% as we speak right now, and thankfully bouncing back a little bit from yesterday's turmoil. Not yesterday, I must say, last week's turmoil, where you saw quite a bit of cuts for the benchmark index as well as the broader markets. At this juncture, most sectors are in fact trading in the green, and you have the benchmarks. Of course, you have the broader markets that are under a tad bit of pressure, but just about flat for the mid-cap index and down about 0.7% for the small-cap index right now. But most of the sectors, as I was mentioning just a short while back, are trading in the green, led by the realty index, which is up and about in trade today. Close to 2% gains, and across the board gains at that. And today you also see strength for the Nifty Bank, which has been under a tad bit of pressure in the last few sessions. It's up about 1% or so. So is Nifty Finance, and Nifty Metal also gaining about 1% or so. FMCG up about 0.6%. Oil and gas, energy, PSU banks, all of them gaining in trade today. But there are a few pockets that are buzzing on the back of thematic news flow, I would say. There are a few stocks, Mahima, on the back of order wins, contracts that are buzzing and doing quite well.
Absolutely. Let's pull up JBM Auto and see how that's faring out in trade today. It's one of the stocks that was in focus at the start. It did see a lot of uptick in the starting of trade, but it's down to around 1% as we speak. This is because its subsidiary has formed a JV, and it's been awarded new contracts from Ahmedabad, and this is BRTS Ahmedabad, so it will be operation and maintenance of around 343 electric buses. Let's also pull up Interarc Building Products. The company has projected 50% growth in Northern India for FY25 and 26. GMM Pfaudler is the another counter which is buzzing. It's entered into an agreement to form a JV of the company, and this is in Germany. Let's also pull up Greenlam Industries. The company's Greenfield Particle Board in Andhra Pradesh has been delayed. India Cements is the other counter which is buzzing on the back of Ultratech receiving CCI approval for the acquisition of India Cements, and the stock is up around 8% as we speak. Vedanta is another counter in focus. The company will have a 5 ways demerger, but it is said that it will retain base metals company, and this is because of the ongoing exploration of alternative avenues, and also lenders believe the scheme would be more favorable for unlocking value. So these are some of the counters, Alex, that are buzzing in trade today on the back of couple of updates that came out throughout the weekend.
All right, so if you've got questions on those stocks, then you can call us on that number that you see on your screen, or you can simply send us a message, as some of you have already done, on the WhatsApp number that should be on your screen in just a bit. But our guest today, we've got Avinash Gorakshakar, who is director at Profit Mart. And we've also got Ajit Mishra, who's SVP Research, Religare Broking. Thank you so much, gentlemen, for taking the time. And season's greetings from all of us at NDTV Profit to the both of you. Avinash, just coming to you very quickly, I'll come to you, both of you, before we get started with the questions, very, very quickly, on your top picks heading into the end of the year. Avinash, I'll start with you.
Yeah, I think, Alex, we continue to like real estate as a sector, and I think we have been liking Anantraj for a very long time. Anantraj is one of those North India-based companies which has got a combination of both real estate and data centers. My sense is that this company is going to see a dramatic change in its revenue mix over the next 2 years, and data center business being a very good long-term opportunity. They are putting up a 300 megawatt capacity. Around 28 megawatt gets operational by March 25. So I think clearly, this year the company should end up with a profit of 350-360 crores. Last year it was about 270 crores. Q2 numbers have been very strong. I believe Q3 also should be equally strong because of the festive season. And most importantly, within Noida, Gurgaon, they have a very large land bank. So all said and done, I think you could probably look at levels of 950 to 975 over the next 12-15 months. So it's a portfolio stock. A lot of institutional interest and a lot of HNIs have started accumulating it. We believe that even at the current levels, one can expect a decent risk reward if the time frame is around 12 to 15 months.
I believe we've got our first caller of the day, but before we do go to our caller, Rajan, let me go to Ajit just very quickly to get his view. Ajit, what are the stocks on your radar heading into the end of the year and into 2025?
Yeah, good morning, Alex. Considering the kind of tone that we are again in, means after this recent phase of recovery, again, we are down to the November's low. I feel defensives, they are better placed, especially for the short-term trades. And within the pharma basket, Lupin is something that we like. The stock has already done with almost 3 months of consolidation, and it was more of a time-based correction. It didn't participate much on the downside as well. So we expect a gradual recovery in the stock, and 2250 is something that we are eyeing in the near future. With stop at 2110, one can go long. At the same time, auto, I still feel that we may have more legs on the downside. And within the large cap names, Maruti is something that may witness fresh pressure. So alongside with a long position, shorting Maruti at current levels with stop loss at 11,050 and for target of 10,620.
All right, those were the top picks from Ajit today. For 2025, we have our first caller for the day. Rajan Iyer is calling in from Mumbai. Hi Rajan, thanks for calling in. How can we help you?
Good morning, madam. Once again, proving lucky to talk to Alex sir and yourself.
Thank you so much.
And my query will be for both the analysts because of the IPO factor.
Okay.
I have Sagility India, 1,000 shares at an average rate of 40.
Okay.
I am a long-term investor for 3 to 5 years.
Okay.
Kindly tell me the prospect because I held that share because I saw the management interview with Nikun sir, or somebody else took that interview.
Okay.
So I like the prospect of the company which is doing some insurance and the overseas business. So I found it much better. Please advise me.
Okay, interesting. Rajan, I'll quickly come to you, Avinash, on this one. Do you have coverage on Sagility India?
Yeah, I think, the investor can look at holding this stock from a medium-term perspective. I think clearly, I think most institutional investors have also started becoming positive on the stock. I think the company operates in the US in the healthcare space and has a very strong competitive, kind of positioning there. Most importantly, I think the kind of visibility the business enjoys, I would not be surprised that over the next, say, 1 to 2 years, since the investor has got a very long-term view, he could definitely expect profitability to jump significantly, because I think the cost benefit arbitrage plus the kind of big opportunity in the US healthcare market is something which is going to grow exponentially. So I think he could expect a very decent reward provided he's invested here for the next couple of years.
We've got a question. I do not know what the name is. By the way, in case you're sending us a message on WhatsApp, do help us with your name, because it'll be easier for you to identify when we take your question. There's a question on a stock that is in the news today, Bharat Global Developers, and this is an important point to make on the show because it deals with your questions, right? A lot of you may have heard of this because the stock has been on a tear, but the Securities and Exchange Board of India has suspended trading in Bharat Global Developers. So we've got a question as to why it's not tradable. That's because the regulator has stepped in and stopped trading in this security, in this counter, and that's because of allegations of fake disclosures and misrepresentation of financials. We've got a detailed story on the website. I would encourage you to go to ndtvprofit.com and read the details of the order that has come through. And in the meanwhile, let me just quickly go across to Avinash. Avinash, do you have any idea about this company, and what would you do in a situation like this where you have a regulator that stepped in and stopped trading?
I think, Alex, whenever such kind of news flow comes in, it's always better to be on the sidelines, because these kind of companies, retail investors invest without looking into the facts and figures. And if there is some allegation or there is some, report which is saying clearly that, the stock has been suspended, I would believe that, such kind of stocks have to be very carefully evaluated. I would not like to, tell any investor to buy even at the current level. I think it's better to wait for some clarity to emerge, because in this market, I think it's always better to play on good quality businesses which have got good regulated kind of standards.
Right. We have our next query from Vikram. His query is on JTL Industries, bought at 124 a piece, and he has 2,000 in quantity. He wants to know as to he should add at the current levels or he should keep holding. Ajit, what's your view as to JTL Industries on charts?
So Mahima, this stock has been witnessing correction for almost like 6-7 months. So it's broadly a range basically, and we are closer to the lower band, the same, close to around 90, 91 is something that the stock tested last time, and we saw a rebound. But the texture has not changed yet, means still there's a possibility that this time around we might see a breakdown below 88, and which may push the stock further lower. So I won't recommend adding to your loss-making position, even if the stock witnesses recovery, until we reclaim 110 mark decisively. So as of now, you can stay put with 85 as a strict stop loss for this position, and use any recovery to reduce your position, because it's likely to remain in the range until we break 110.
Okay, cut your position is the call on JTL Industries. Anish from Mavelikira in Kerala is asking the next question. IOCL is the name of the counter that he wants to know about. He's already bought at levels of 147. The stock is currently trading about 10 rupees below his buy price. He's got 300 shares, and he's wondering whether it's a good share to hold or stock to hold for the next 2 years, or should he switch to something else? Avinash, what would you say about this pick from the oil marketing space?
I think IOC is definitely a good investment proposition if the investor wants a good dividend yield, Alex, because typically what we have seen is that IOC pays very good dividends. So I think, if the investor has bought the share looking at the dividend yield, then I think this is definitely a good bet. I would believe that, giving a 2-year time span is definitely good enough, but dividend yield probably is a much better option for IOC, because the oil marketing companies are typically momentum kind of stocks where oil prices determine the profitability of these companies. So, from a longer term trajectory, not much wealth creation can happen. But yes, if the investor is very keen on dividend yield, then I think it's a good bet to, bank upon.
Understood. Okay, we've got our next caller. Vinay is calling us from Bengaluru. Morning, Vinay, and compliments of the season to you. How can we help you today?
Good morning, sir. Good morning, all of you. You are doing wonderful job.
Thank
so
you.
that people are getting good views on their stocks.
Thank you so much.
So I just want you to ask HPL Electric.
Okay.
My buy price is 284.
Got it.
And my quantity 258 shares I have purchased, and I am sitting on a profit of 94%.
Yes.
So whether I should hold the stock or now it's time to sell.
Okay.
Just I wanted to know that.
So
Please
what was the time
clarify.
frame that you had in mind when you bought? You must have bought earlier in the year, right? Or at the start of the year?
Yeah, beginning of the year.
Beginning of the year. And what was the time frame that you had? You had a 1 year time frame in mind?
Yeah, absolutely. I was having a time frame of 1 to 1.5 years.
Okay.
But I got good profits earlier. Now I thought whether valuations are higher now, is it time to sell?
Okay.
Or if possible, if I can hold furthermore, another 1 to 2 years, I can hold it.
Okay. So, but you bought it based on the fundamentals, Vinay. What was it about the company that drew you to it?
Yeah, it's into smart meters. So only two companies in the listed space who are Genus Power and this company having smart meters advantage. So based on that, I have purchased.
Got it. Thanks so much. And I'm glad that you've done your reading. Also, the buy price is quite attractive. Congratulations on having acquired it and having gotten 100% practically gain in the stock. Avinash, 3,500 market cap company, done particularly well over the last year. He's wondering whether to take some money off the table or should he hold more prospects for growth?
Yeah, I think, see, if you look at the runway for growth for smart meters, I think, we are going to see a very large exponential market coming up in the next, say, 2 to 3 years. And, the investor is right that there are only a couple of companies like HPL Electric and Genus Power who are into smart meters. So I think business is going to grow, but I think one should also keep in mind that, he's bought in at a very low level. So, as a margin of safety, I would believe that at least book part profits and, make the capital free. So, even if he can dispose of, say, 50 shares, he can recover the entire cost and possibly, the remaining shares are virtually free for him. So in this, aspect, I think he generates a little bit of cash flow and makes his positions more safer, considering that if the market turns volatile, he would obviously get the benefit of, taking out his cost of capital and, keeping the rest of the shares free.
All right, that's the view coming in on HPL Electric. The next question is from Nikit, who's from Hyderabad. He's holding REDA 527 shares, bought at 62 a piece. Let's pull up the stock. So he's sitting on significant profits of 70,000 rupees. He wants to know whether he should keep holding them and whether it'll come back to the 310 levels or should he sell at the current levels. Ajit, I'll come to you for this one. Your view on REDA, how does it fare on charts?
So Mahima, IREDA, after this corrective phase for nearly 4 or 5 months, of late we've seen an attempt of recovery. The stock managed to surpass the short-term hurdles as well. But again, we are seeing at the higher end, the stock witnessing pressure around 220, 210 area. So it's likely to spend some more time is what the indications are. So at least in the near future, 180 to 220 is something that I'm eyeing as a near-term range. And in the next move, once we cross this hurdle of 220, then probably the next leg of the momentum is something that may set in. So as of now, he can continue to hold this position since he's sitting on a decent profit. We should maintain a trailing stop loss at 180 because below that, the bias would completely turn from sideways to negative.
Right, so it's a hold for IREDA with a stop loss of 180 as per Ajit. Moving on, we have our next caller. Chandramouli from Madurai is calling us. Chandramouli, thanks for calling in. How can we help you? Hi, I can hear you, Chandramouli. Can you hear me? Okay, I think we have a patchy line. We'll get back to him in some time. We have our next question from Sampath, who's from Coimbatore. He has Oil India shares so he's bought 300 shares, bought at 485 per share 1 month back, and it's now trading at 420 odd levels. Should he sell them or hold them? He's saying his target is for 1 year, and Ajit, I'll come to you on this one. 1 year on the charts, how does it look, Oil India?
The challenge is that we convert a trading position into investment. So that shouldn't be the case. He has bought it at 480. In case if we have made it on the from the long term perspective, definitely he should continue to hold, because short term buyers definitely have turned negative around its buying price itself. And since then, we have been seeing gradual decline. I see the stock, it might take a breather around the current area, 400, 410, due to the oversold position. But upside seems capped in case if it sees a recovery. So in case, if you wish to liquidate his position, so maybe close to around 450, 460 area. That's the zone basically where he can look to liquidate. And for fresh entry, one should wait for any sign of reversal or sustainability above 510 decisively in this stock for trend reversal.
All right, we have our next caller, Pradeep Kumar from Kerala is calling us. Pradeep, thanks for calling in. How can we help you?
Good morning. How are you?
Good morning. I'm good. How are you?
Thank you. Actually, I'm holding almost a year, Zen Technology.
Okay.
I think I got right now is almost a decent profit, but I don't know. I'm just hoping to it's going to be up or still, the better time to sell, or I can hold.
Right. You bought it at 702 a piece, right?
Correct.
And what was the idea behind buying Zen Tech?
Because Zen Tech, actually, I don't know, I like that one. And another thing, I saw some of the, that's related to the defense sector.
Okay.
Yeah, that's the reason.
All right. Avinash, I'll come to you on this one. Zen Tech, should we keep holding at the current levels?
Yeah, I think, he's gotten at a very low level, and I think Zen Tech has got a very large order book as far as, drones are concerned. And within the defense market, there are very few players who cater to this requirement. So typically, if the investor can hold on for the next 1 to 2 years, I think revenue visibility is very strong. Obviously, margins are also going to be very good, and the management commentary has also been very, strong. So I not only FY25, but even FY26 and 27 should be equally strong years. So I think, despite the fact that he's made 3 times his capital, if he wants, he can probably book out some, profits and keep the cash ready. But otherwise, I think he can comfortably hold for the next 2 years.
Okay, so unless you need the cash, Pradeep, don't book out is the view on Zen Tech. And congratulations to yet another viewer who has gotten an amazing buy price. Congratulations, and congratulations for holding on and retaining the gumption. We've got a question on SG Mart, and this is a very long-term question. We've got Mohan, who is currently holding at a price of 400 rupees per share. 100 shares is what Mohan has got, would like to add more for the very long term. Avinash, we're talking about 10 years which he's willing to give to this stock. What is the advice that you would give him on SG Mart?
I think he can comfortably hold on. See, this company has basically come about in the news largely because of a reverse merger. And I think, the promoters of APL Apollo are similar here. So basically, the pedigree of the top management is very strong. In fact, SG Mart has shown very strong numbers in Q2, and I think this momentum will continue. There are a lot of marquee names also who have invested in this company. And I believe that, if the investor can give even next, say, 2 to 3 years, one could expect very good returns over the medium to long term. So I think, you need to give in some time here, Alex. The business is growing. I think you will see a better performance in FY25. But FY26 would be a kind of a takeoff year. So, some more time, and I think the stock would definitely get re-rated.
All right, so that's the view on SG Mart. And, if you have even a 2-year time frame, it's a good idea to hold. Let's talk about the next one. And we've got Vipul Sheth, who's calling us from Ahmedabad. Vipul, good morning to you. And how can we help you today?
Good morning.
Good morning.
I am holding the 25 shares of Siemens Limited.
Right.
At the average price of 3650.
Okay.
But after current negative guidance by the company, can I book the profit or continue to hold for the long term?
Yeah.
Or buy on decline, accumulate more on decline?
Yeah. So
I can hold the shares for more than 2-3 years. No problem.
No problem, right? So what you're referring to is the growth outlook that the company has highlighted, and it's noted potential delays in securing large orders. And you're concerned about whether or not you will see further erosion, considering that your buy price is very attractive. Vipul, when did you buy the stock?
2 years before, I think.
Okay, and what you're thinking of is adding more or just holding on to what you have right now?
Can book the profit.
You can.
Actually, it is now currently traded at around 6,600.
Yes, exactly. So, but you've not thought of adding more stocks, more shares, Vipul?
Yes. If on downside, I can.
Okay, on downside you can. Avinash, Siemens, a stock that has done incredibly well. And Ajit, so sorry, I'm keeping you waiting. We've got a lot of fundamental questions. But Avinash, the entire cap goods space and a few of these names have done incredibly well. Siemens, one of them. But the latest update is not so good, right? And people have pointed out that the valuations might just be a little bit stretched for somebody who's acquired at early levels. Would you hold on or would you book right now?
No, I think, see, Alex, in these kind of companies, 1 quarter number and one, guidance given by the management does not, change the long-term story in these companies. And mind you, these companies are MNC companies. The best part about these companies is that they hardly make any equity dilution. So I think, these companies reward shareholders in a significant way over the longer term. So I think, if the investor has a couple of years in mind and he can take the short-term, downside in a stride and wait for the longer term, then I think, India is a market which is a very large market for a company like Siemens. So I think near-term worries could continue. Maybe the stock could underperform for the next 3 to 4 months. But typically, once the budget is announced, once the market starts moving positively, I think Siemens can bounce back equally smartly. So I think, it's always better to hold on. I don't think he would be able to get in Siemens at the price at which he purchased earlier. So I think his margin of safety is also pretty solid. So I would suggest continue to hold for the next couple of years. I think these aberrations will come in, but longer term prospects are, very strong.
From that perspective, let me get Ajit's view. Ajit, a quick view on Siemens. At what level does it become attractive to average your cost?
Alex, that's been almost a vertical rise. Since 2021, the stock didn't participate much on the downside. Means the correction was more of a time wise, and that too for a couple of months, and then again the stock witnessed strong momentum. This time around, at least from the last 6-7 months, we are seeing decisive pressure around 8,000 mark. So it made multiple attempts to cross that hurdle, but it couldn't sustain. And now we are seeing that this critical area, close to around 65, 60, is something that one should closely watch on a closing basis. In case if it fails to hold this area, let's say on a monthly closing basis, then we may see some serious correction in the stock, which can help the stock to inch toward the 53, 50, 5,000 range, somewhere around 5,000 range. So that is something that one should be, cautious of. And I would say that, one can start accumulating closer to around 6,000 mark and in the range of 5,500 in case if somebody wish to accumulate fresh.
Got it. Ajit, thanks so much for that view and indeed for spending your time with us this morning. Pleasure having you on the show. Avinash, we'll be back to speak to you and ask more questions to you after this very quick break. Viewers, do stay tuned. We'll be back on the other side to take more of your questions.
By the way, let me compliment you and your channel. I find very insightful discussions. Even, if I have to know more about India, those are the discussions I hear, right? So kudos to you, Tamanna and Samina. I found it very, very insightful all the time.
We set you up for the day's trade. 30 calls before the markets open on NDTV Profit.
Jubilant Food above a 600 level on Friday.
Wipro can be first to buy
all commodities, but in that Vedanta looks good.
Our experts give you the top stock ideas to prepare you for the day.
ICICI Lombard stocks hit the first target.
It has given a very good momentum with good volume.
Don't miss the chance to make the right moves. Only on NDTV Profit, where winners are made before the bell rings.
When the whole day passes like a blur, the news just whizzes past. and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow, the newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow, the newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow, the newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Neeraj, by the way, let me compliment you and your channel. I find very insightful discussions. Even, if I have to know more about India, those are the discussions I hear, right? So kudos to you, Tamanna and Samina. I found it very, very insightful all the time.
We set you up for the day's trade. 30 calls before the markets open on NDTV Profit.
Jubilant food above a 600 level on Friday.
Wipro can be first to buy
all commodities, but in that Vedanta looks good.
Our experts give you the top stock ideas to prepare you for the day.
ICICI Lombard stocks hit the first target.
It has given a very good momentum with good volume.
Don't miss the chance to make the right moves. Only on NDTV Profit, where winners are made before the bell rings.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow, the newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Log Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay.
756 around.
Okay.
And I'd like to accumulate actually, and I'd like to know for the short-term period or medium term, like probably I'll be holding like a 1 year approximately.
Okay.
I'm looking for it.
Okay.
And I'd like to have everyone's opinion on it, and I keep on following this show every time, and I keep on asking the show every time on the WhatsApp. So luckily, I got this call connected this time.
All right. Avinash, I'll quickly come to you on this one. 1 year, Swan Energy, what are the prospects?
I think, since the investor has just got in at the current level, I would believe that, Swan Energy definitely would be a big beneficiary. They have recently decided to, demerge the defense business, and, defense company shares are also going to be offered to shareholders. So I would suggest that over the next 12-15 months, you could see a lot of good corporate announcements in terms of business deals, in terms of the performance getting better and better. In fact, there's been a lot of interest from the institutional investors side, because there was a QIP which was done recently. So I think a lot of strong hands have entered the stock, and I think, this is definitely going to stock a little bit, in buzz. So I think give a time frame of at least 12 to 15 months, one can expect a decent risk reward even from the current levels.
And you bought at elevated levels, so certainly something to watch. Thanks, Avinash, for that view. Hold is the view on Swan Energy at 743 or thereabouts. The next question is from Sujata. She's writing in from Bengaluru, asking about Geo Financial Services. And this one is for you, Brijesh. Bought at levels of 250 rupees. And Sujata has seen the price drop a little from the elevated levels where it's been, if I'm not mistaken, around 330 or thereabouts. She's wondering whether to hold or to exit at this point.
Okay, so one thing for sure, the Geo is now seeing some selling pressure. So there has been distribution in the chart. This is purely from the monthly time frame. So there has been sell-off in the current month as well. And this level of 300 is very crucial. So by any chance, if this level is not held during this current month, previously the rally started from the lows of 250 marks. So somewhere the stock can go back to 250 is what I can see. So structurally, it is not that great. Maybe one has to take little bit more longer time frame. So, but then whether to hold or not, it's an individual call. But then I would say technically it looks slightly weak. Distribution is there, and there's a high probability this may come close to 250 levels. Maybe one can look at those points and understand given the fundamentals, or maybe at that time whatever the news events, whatever the story may be. But maybe averaging or not averaging, one need to take a call. But then somewhere I feel 250 might come on charts, so one has to look for that.
What stop loss would you keep as of now, Brijesh?
So weekly time frame, the last weekly 342 was the level from where the sell-off came. So that on the higher side, that is a resistance, and below 300 it will slip down to another 50 points.
All right. So I believe 250 is where the stop loss stands.
And the buy price was also 250.
Yeah, 250, exactly. Moving on to our next caller, Paramjeet from Himachal Pradesh is calling us. Paramjeet, thanks for calling in. How can we help you?
Ma'am, I'm having Zaggle prepaid shares at the rate of 6,400 shares.
ठीक है.
I want to know the long-term as well as short-term view on this stock.
अच्छा ठीक है एंड कब बाय किया था आपने ये स्टॉक?
4 months back.
ओके ओके एंड क्या सोच के बाय किया था ये स्टॉक आपने?
I have studied a lot of this share. It's a moat. It's a monopoly business.
Okay.
I have studied a lot of this share.
ठीक है, all right. Avinash, I'll come to you on this one. Zaggle, how does it, look fundamentally?
I think, the investor seems to have done his homework pretty well. So I think, he should keep a 2-year view because this is a business which has got a huge scalability potential. And I think, recently the company has tied up with many other service vendors. So, this concept and product has taken off very well. There's a good amount of order book with the company. So my sense is, keep a 2-year view. And I think you could expect a very solid kind of return, from the current level.
Hold with a 2-year perspective, and it's done particularly well over the last 3 months. Congratulations on the acquisition that you've made and the research that you say you have done. Sujal Mandal has got the next question and asking this question from West Bengal. In the hospitality space, Chalet Hotels is the acquisition and 981 is the buy price. Is there an IPO this week in the hospitality space?
Yes, it's Ventive Hospitality, which is coming out with
so there are a number of options available, Avinash, in the hospitality space now. Is Chalet the best one to hold? And quite a few of them are morphing their strategies to that franchisee model rather than owning their own keys, right? Avinash?
Yeah, Alex, largely because, I think recently some reports have come in that hotel room average ARRs have shot up again. And I think this being the festive season, you could see a lot of these kind of news flows coming in, but largely because supply side, there's been a big crunch of availability of rooms. And I think almost all the hotels should do well. I think, if you talk about Chalet Hotels or the market leader, Indian Hotels, or even ITC Hotels, which is now going to be demerged very soon, I think there is a very good opportunity for investors to, park their money here and look at it, from a slightly medium to long-term horizon. So I think not only FY25, but even FY26 should be significantly better. Chalet is definitely looking promising, but I think if one were to look at Indian hotels, it trades at around 840, 850 odd rupees. So I think here the propensity to show a disproportionate increase in profit is significantly high, considering their geographical reach and the size at which they operate. So Indian hotels could be a much better bet if one were to look at the next 12-15 months.
All right, so prefer Indian hotels is the view from Avinash. Shravan Kumar from Hyderabad is calling us. Shravan, good morning to you and season's greetings. How can we help you today?
Yeah, hi team. So actually I am looking for the KPIT Technologies. So I have actually bought 140 shares at 1553. So now it is currently down at like I think 5 to 6%. So can I hold for the short term? I mean, how it will be like? I have also seen that some of the acquisitions from the company announced December 13th, December 8th it seems. So I mean, what would be the view for it? Could you please tell me that? I mean, I'm looking for short term.
Yeah. Oh, you're looking for short term, but then you've been paying attention to the fundamental update. So, is that the reason why you bought, or is the price action the reason you bought, Shravan?
I bought because of the fundamental. I could see that there is a lot of growth in coming days. That's what I said. But I'm just surprised that it is keep on getting down. So that's what the thing.
So let me ask you this: if you bought based on the fundamentals, when did you buy?
I think it's been 7 days. I mean 10 days only. Yeah.
Okay.
7 days.
So would you be willing to hold for more than a year if the advice were to be that?
Yeah, I'm looking for 6 months. Is it fine?
Okay. All right. So generally, if you are buying for the fundamentals, the view is that you should be willing to hold for the longer term. So let me take your question to Brijesh on the technicals and to see what the prospects are for the next 6 months. Brijesh, bought at levels of 1,519. What are the prospects on the upside?
So if I look at the monthly time frame, I can see that for the last 4-5 months there has been selling, and this stock is coming to the demand zone. So 1350 is the level where it has taken a support for the multiple times. So even though even in the this current month the low was 1340. So this 1340, 1350 is a level where this particular stock is finding support. So the time frame is very small, and we are talking only another 6 months, 6 to maybe 8 months kind of time frame. 1350 should be the stop loss for this long position, because just in case if 1350 is taken down, I believe this can go back to 1200 levels. But then still, if we willing to take that long bet and do some averaging near 1200, that is advisable. Or else, if he sees a close below 1350 on a closing basis, he need to review his position.
That's the view coming in on KPIT Technologies. Moving on to the next query, Sonali from Mumbai has a query on Parag Milk Foods. She's bought 500 shares at 236 a piece, and she wants to know whether she should keep holding it or book profits at the current position. I think we'll take a fundamental view on this one. Avinash, do you have a coverage on Parag Milk Foods? Very interesting play. These days dairy product companies are moving towards premiumization. Does Parag Milk also fall under that category?
Yeah, I think if you take a medium term perspective, I think more and more of consumer and branded products are entering the market, specifically as far as the dairy segment is concerned. And Parag Milk is a well-established player. I think they have a very good product, kind of menu. Most importantly, I think numbers for Q2 was slightly disappointing. But I think the management commentary has been quite reassuring that the second half will be much better. So, typically if the investor is out of money in the current investment, my suggestion is that at least keep a time frame of at least 12 to 15 months. Typically we see the second half of most of the dairy companies, much better than the first half. And obviously with milk prices under control and obviously value addition, in terms of packaging, branding, increasing rapidly, definitely I think the long-term prospects are good. So I think near-term could be a little volatile, but medium to long-term prospects, I think the investor should hold on.
All right, that's the view coming in on Parag Milk. It's a hold from Avinash. We have our next caller, Debashish Ghosh is calling in from Kolkata. Debashish, thanks for calling in. How can we help you?
I want to purchase the auto ancillary company named Pritika Auto Industries. Okay. It is a good time to hold, to purchase or not.
It's a very small company, compared to other auto anchors in the space.
Sorry? And the different type of they supplied the auto ancillary to the Swaraj, Ashok Leyland, and different brand name.
Okay, all right. Avinash, I'll come to you on this one. Do you have a view on this counter, Pritika Auto Industries? It's a very small company.
See, this is a auto ancillary player which largely caters to the tractor and commercial vehicle players, largely based in Faridabad, and has a good clientele including Mahindra and Mahindra. So, typically in these kind of companies, liquidity is slightly on the lower side. So, if the investor wants to take a call, he needs to take a long-term view, because unless more liquidity comes in, you may not find large investors getting into these kind of stocks. So, my sense is that if you have a 2-year view, then I think this could be a good opportunity, and one can definitely park some money here. I think we can expect a decent risk reward. Hopefully, once the commercial vehicle and tractor cycle turns positive. In the near term, there could be a little volatility, because both the tractor and commercial vehicle segment of late has turned a little soft. So that could possibly be a little near-term impediment, but longer-term prospects are good.
Just a follow-up from my end, because I'm curious how you're reading this, Avinash. And I've been looking at the tractor volumes for M&M. There actually has been a little bit of a mismatch in some pockets, right? Where one or two companies, I can't remember which, have actually been positive on the tractor sales and a couple have not been. So when do you see that cycle turning for the tractor sales? Do you see it happening in next year, 2025?
Yeah, I think, Alex, next year could be a much better year. See, because this year monsoons have been good, but there was some, I believe, some excess supply in the tractor market. So I think that got, obviously that got absorbed gradually. So I think, typically a normal growth rate for the tractor market is 7 to 8%. And Mahindra is the leader here. So hopefully, once Mahindra and Mahindra starts reporting better numbers, one could expect that this industry will be again in a good kind of positive trajectory. So 25-26 should be a much better year. So based on that, I think most of the tractor ancillary players should do reasonably well.
Okay, all right. The next question is on NCC, and Brijesh, I'll come to you on this one. We've got Prashant from Cochin, who's bought at price of 300 rupees per share 400 shares have been bought. Would it be a hold for you? Would you buy at this current level? It's a small loss, if I'm not mistaken. The current price is 285 or thereabouts, and the buy price is 300.
No, I think NCC overall it looks good. There has been maybe with the market scenario, there has been some profit booking has been there, but this level of 280, 275 is a decent support level. So, and it maybe in next couple of days, if it starts, if it respects this level 280, 275, then the stock can find support and it can start moving higher. So on the way up, I think maybe a little bit longer time frame, it can go back to 330, 350 levels. So, and the recent low was 270. So one can hold this long with the stop loss below 270 for the target of 330 and 350.
Hold is a call on NCC. Remember, the stop loss is 270. We've got our next caller from Roorkela. D. Mazumdar is calling us. Hi, sir. How can we help you today? Morning.
Yeah. Hi. Good morning. So I am holding Andhra Sugar.
Okay.
At the rate of 176. I am holding 1,000 shares for the last 3 years.
Okay.
So at that time, actually, the ethanol story was just coming up, and it had also reached its high point.
Yes.
But now it has come down and it is not moving further. What is the future outlook? Will it reach my purchase price and go beyond? Or if I need to sell, then any alternate investment option?
That's a very comprehensive question, and thanks so much, Mr. Mazumdar, for that. Let me take it to Avinash. He's had quite a bit of patience and he's lost ground, Avinash. Obviously, ethanol is continuing to be a talking point with the government trying to push higher blending targets for the oil marketing companies. Of course, a question mark there has been how the OEMs are going to transition their technology to facilitate that high blending, which does not exist right now, right? So, would you hold on to Andhra Sugar or would you move to something else? And traditionally, what has also been pointed out is companies like Praj, which facilitate the blending and provide the technology for it, might have been a better pick.
Yeah, I think, because my sense is Alex, he has already lost 50% of his capital. And the quantity is also pretty large. So my sense is, I think he should switch over to some other, kind of sectors or companies, because clearly 3 years is a long period. So my sense is, he could look at some of the smaller banks. We like Federal Bank within the smaller banks. So I think that could be a good opportunity at the current level. And I think clearly, with hopefully interest rates likely to be cut soon, and with the infra spend plus the consumer spending which is happening, plus the private capex which is happening, I would not be surprised that Federal Bank could be a good bet, considering that this is a more popular stock amongst institutions and FIs and the ultra HNIs and the PMSs. The Andhra Sugar, the bigger problem is of liquidity also. There are hardly any institutional shareholders here, and the liquidity is also very, very low. So I think this also goes against the stock. So I think Federal Bank from a long-term perspective can be a good switch.
All right. So hopefully that answers your question, Mr. Mazumdar. It is time now to switch to the rapid fire segment, and this is where, gentlemen, we throw questions at you over the course of 2 minutes and we ask you to try and answer them as quickly as possible. The first question is coming your way, Avinash, on the fundamentals. PC Jewelers, we've got a viewer who has been acquiring at lower levels when it was at 1.4 rupees per piece, 22,000 shares. Would you hold at this level or exit, book profit?
No, I would continue to hold, because there's been a complete turnaround, and I think, market loves turnarounds. So I think, we'll have to wait for better numbers to come out, Alex. But I think these levels, definitely, if the numbers are better, then I think the investor should hold on.
All right. Jai Kishan from Gwalior is holding 500 shares of Shoppers Stop at 700. What should be the next target and stop loss? Brijesh, I'll come to you on this one.
So I think he can hold on the position, but then the level of 700 is the 200-day moving average, so that will see some resistance. Once this level is taken out, then probably the stock will turn into positive. But right now, 550 would be the stop loss, and 700, 720 would be the resistance.
Okay. Huhtamaki India, this is a question from Satish. Bought at a price of 319, currently in a loss. Would you hold based on the fundamentals, Avinash?
No, I think, looking at the kind of sluggishness in the FMCG sector, because this company largely caters to the FMCG basket. So I think it's better to sell on any rise.
All right. Bajaj Housing Finance, what's the outlook for 5 years as per you, Avinash?
Yeah, I think clearly within the housing space, it's one of the large players, and I think you need to give it a little more time. But I think in terms of asset quality, in terms of the loan book, I think definitely an investor can expect a decent risk reward.
Okay, Dixon Tech at 18,400. JM Dave wants to know whether to hold on. Avinash, what's the view?
I think at these levels, if he's entered at a lower level, Alex, he can continue to hold, but no fresh buying advisable.
Okay, Bharti Hexacom is the next counter. Neha wants to know, she's from Bangalore, whether she can keep holding it for another 3 to 6 months. Brijesh, your view on the charts for Bharti Hexacom?
Yeah, I think the charts are in positive trend. So most probably yes, 1750, 1800 can be the possible upside, and with the risk of 1400 as a support zone.
Okay. Brijesh, Avinash, on that note, thank you so much for joining us, for answering all the questions that you did. Always a pleasure having you on the program. And once again, from all of us at NDTV Profit, season's greetings to you and your families and your teams, of course. And that brings us to the end of this particular edition of Ask Profit. We've got lots lined up over the course of the day. I'd encourage you to stay tuned. From Mahima and myself and the team that put this show together, thank you so much for watching. Do stay tuned. This is NDTV Profit.
By the way, let me compliment you and your channel. I find very insightful discussions. Even, if I have to know more about India, those are the discussions I hear, right? So kudos to you, Tamanna and Samina. I found it very, very insightful all the time.
We set you up for the day's trade. 30 calls before the markets open on NDTV Profit.
Jubilant Food above a 600 level on Friday.
Wipro can be first to buy
all commodities, but in that Vedanta looks good.
Our experts give you the top stock ideas to prepare you for the day.
ICICI Lombard stocks hit the first target.
It has given a very good momentum with good volume.
Don't miss the chance to make the right moves. Only on NDTV Profit, where winners are made before the bell rings.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Neeraj, by the way, let me compliment you and your channel. I find very insightful discussions. Even, if I have to know more about India.
Hello and welcome to KYC. KYC, Know Your Company, as the abbreviation is. It's a brand new show on NDTV Profit. In the fast-paced world of stock markets, investors are bombarded with information. But what we do in this one is we dive deeper into companies, give a comprehensive understanding of companies, and that we believe is more relevant for investors to understand. Know Your Company is a show designed to give regular investors powerful, actionable insights into the fundamentals of single NSE listed companies every day. And this is, of course, a daily show. Today, we're going to cover the company Prestige Estates from the real estate pack. It's the first time we've picked a real estate company, and therefore breaking this down is going to be ever so interesting, and we're going to have the management towards the latter half of this show. What does Prestige do? Well, it's a diversified business model, and it covers or it operates across various segments of the real estate, the industry as a whole. You have residential, office, retail, and hospitality, all of which Prestige does and has always been doing. They've completed 300 plus projects based out of Bangalore to start off with, but thereafter they've diversified. But 300 plus projects spanning a developable area of 180 million square feet. They have 56 ongoing projects across segments with a total developable space of around 86 million square feet. That's how it's currently placed. In terms of where geographic sales is concerned, that's your distribution mix, skewed towards Bangalore, as we did suggest. There's also Hyderabad, now Mumbai, contributing nearly a quarter of the sales of Prestige Estates. It will be great to also understand how they are evolving this. I want to quickly mark out the stock of Prestige if we can. And the way in which it's moved. Over the last 3 years, of course, it's been a 4x. But when you're looking at the last 6 months, the stock is down roughly 15% thereabouts. Year to date, it's given a 47%, very healthy return. And the 1 year as well, looking very healthy. It's nearly 56% in terms of its returns. It's been a 5-bagger in the last 5 years, and it's created tremendous wealth. In fact, when I'm looking at the December 2011 stock price versus now, the stock is up 24x. So in the last 12 to 13 years, it's been a very, very solid multi-bagger for investors. Now I want to bring on board Anushi first off. These are some of the parameters that we're going to cover. Anushi, of course, is the analyst with regard to real estate, so she'll help us break down all of these parameters, and thereafter we'll have a Q&A with the management as well. So let me first start off with the first parameter, Anushi. Talk to us about operational metrics. How does Prestige stack up on that count?
Absolutely, Harsh. So instead of taking the usual income statement check for real estate, it is important to focus on the key operational metrics, that is in terms of the launches that they're doing, the pre-sales figures. So if you see, Harsh, you mentioned about that Prestige Estates has been a multi-bagger in the last 3-4 years. A lot of it is attributable to the kind of growth it has seen in FY22-23 onwards. If you look at the new launches, FY23, 26.4 million square feet of launches, which is almost from that figure we are seeing 40.2 million square feet of launches in FY24. However, H1 started on a muted note, 10.1 million square feet of launches. A lot of factors playing into this. One is also the election impact that we've seen. Along with that, lack of approvals. This has been one of the biggest factors due to which there have been a shift in the launches as we speak. This is also reflected in the pre-sales number. From what was the FY23 pre-sales number of almost 13,000 crore, that increased to 21,000 crore, and H1 that stood at about 7,052 crore. So we are looking at a downtick of around 36% on a YOY basis, that is on their pre-sales growth. So this is how the pre-sales has panned out on because of the lack of approvals that has been seen in not just the Bengaluru market but the overall residential market as well. Collections, if we look at 9,806 crore, which is increased to 11,000 crore, and this first half we've seen about 5,653 crore worth of collections. That is about a 5% growth that we are looking at. However, average realizations, if we see, that continues to remain on a healthier note as seen in the last 2-3 years of fiscal as well. Strong growth trajectory, but will they be able to sustain this? If we see in the apartment, villas and commercials, we've seen about a 26% of a growth in the average realization, with rates touching the 13,000 square feet of base as well. And even in the plotted business, they've seen about a 7,200 square feet of a realization, which is again a 49% of a growth. So strong trajectory in terms of realizations. But what needs to be focused on now is the launch trajectory going forward for the next half as well as the next 2 to 3 years outlook, and the pre-sales number also. But Harsh, let's also see how the balance sheet pans out for the company.
Well, yes, so let's look at the balance sheet, let's break it down. First off, with regard to shareholders' equity and some perspective here, they've done a QIP in the month of August worth 5,000 crores. So while this balance sheet is obviously sizable for a 76,000 crore kind of market cap company, but keep in mind that 5,000 crore of this has been raised at roughly a 5 to 6% discount to current market price. That's the math. To current market price. So it's been done at 1674 rupees per share, 5,000 rupees of fundraise. That's how it's playing out. Now in terms of debt, 12,000 crore, nearly 13,000 crore of debt, but the debt to equity has shrunk obviously because you've seen equity component within this debt to equity ratio go up sizably as a result of the QIP, which is why your debt to equity looking reasonable. Now cash and bank balances, no surprise, they've just raised 5,000 crore, 4,880 crore sitting in the cash and bank balance. They are also in part of the QIP, they were planning to reduce the debt. How quickly will that happen? We'll probably quiz the management on that. 1,000 crore is what other investments are currently lying in the balance sheet. This number stood out for me, so I added it as part of perspective. And you're also seeing inventory worth 26,370 crore sitting in the balance sheet as of H1 FY25. So that's a sizable number as well, given the market cap and given the debts. I thought this was a relevant metric as well. But Anushi, cash flows, how's it playing out over the last at least couple of years?
So I'll give the perspective on the last two periods. FY24, we've seen cash flow from operations. This was around 5,500 crore of a mark. In H1 FY25, we're looking at a 2,300 crore of a mark for in terms of cash flow from operation. Net cash flows also 1,181 crore. This was the FY24 figure, which has increased to 2,316 crore as of H1 of FY25. But it is the outlook forward, which is very interesting for the company. Now, if we look at what Prestige has done, that in in FY24 also they've recorded quite a strong trajectory in terms of their bookings and pre-sales. They continue to maintain this on a very high base as well. 20 to 25% growth is what they're staying in their bookings, which roughly translates to about 24,000 to 25,000 crore of sales value for the company, and this is with an EBITDA margins of around 20 to 23% that we are looking at. So what is the emphasis is how the H2 is going to pan out, because a lot of launches waiting and bunched up in Q3 and Q4. But let's also see the return ratios, because as an investor that is what the important metric is, right?
Yeah, 20% plus in terms of return ratios, Anushi. So healthy in that sense. You're seeing good ROE, good ROC. And it's been consistent in terms of the feature that Prestige Estates is able to clock good return ratios, and therefore clearly a thumbs up, at least for me, on this one. But really, in essence, Anushi, what really stood out for me was with regard to the guidance and whether they can meet that guidance, and that is something that will possibly be on the street's mind. With regard to shareholding though, because that's a key metric, how much do your current promoters own, or how much skin in the game do current promoters have, Anushi?
Well, promoters continue to stay heavily invested in the company. We are looking at a 61% of a stake in terms of promoters. Foreign investors constitute about 19% of the stake, and domestic institutions about 17% of a stake. So healthy numbers in terms of promoter holding for the company. Public holds about 3.2% of a stake in the company. Do note promoter number has gone down because of the recently concluded QIP which has taken place, but overall healthy trajectory in terms of shareholding pattern as far as that goes as well. But considering the street cred, Harsh, in the beginning you just gave us a little bit of perspective, but let's understand deeper what's happening in terms of the stock performance of the company as well.
Yeah, let's pull that one up. So street cred, we've kind of clubbed the dividend along with what kind of returns that shareholders have got. We've covered this, don't want to delve deeper into it. The street cred is quite strong. They've given very good returns to investors over pretty much the medium to even the short term kind of period, except the 6-month period where it's been negative. And there you go, the dividend yield is absolutely zero, but for a 20% ROCE company, I don't think there's too much to complain about for investors. But in terms of coverage, what are analysts suggesting, Anushi?
So in terms of, if you look at the street coverage, this is more on the buy. So for this is according to what has been pulled up from Bloomberg. We are looking at 16 buy calls, 0 hold calls and 4 sell calls. So overall a neutral mixed picture of a scenario that we are seeing in terms of analyst recommendations. This is with a return potential of around 7.9% that we are seeing as per analyst as to what the consensus is. So this is the overall picture on the street coverage.
Yeah, hence the rally in the stock price, right, Anushi, and hence that upside doesn't look very, very enticing, at least the way in which markets are currently going. But let's quickly come to a summary of everything that we've spoken about. The income statement, H1 has been a soft one, and therefore that thumbs down that we're forced to give. But maybe some commentary, if it were to be good, the guidance, if it were to be good, and if that were to play out in H2, that may well change. But otherwise, balance sheet solid, your cash flow also looks decent. You're seeing good and very strong and robust guidance from management. Let's also talk about return ratios. Clearly a thumbs up, 20% plus. Your shareholding, 60% plus held by management, no concern there. Again, Mr. Razak has literally built the business out of scratch, and therefore really commendable the way in which this business is being run. The street cred is also solid, very good medium to long term returns that the stock has given, and there's decent coverage, but the upside does not seem extremely high. So we rate it currently at 6.5 out of 8, which is one of the highest ratings which we've given, but that's how we sum it up. But let's delve into SWOT, because let's understand strengths and weaknesses. Let me start off with the strengths before I toss it across to Anushi. Diversified portfolio, therefore risks are more diversified. Execution is strong. We spoke about how Mr. Razak has built this business from scratch and therefore knows it so well, and therefore the execution has always been very, very solid. But let's talk about some weaknesses. The newly launched products, whether they will play out, whether they will do well or not. Currently slower sales being seen, but how quickly will that turn around is something we'll have to look for. And of course there's debt. decentish amount of debt, which generally is the case for real estate companies. But is there a debt reduction plan? Is there a plan with regard to how debt will play out, and what kind of threshold of debt is something that the company is comfortable with, is something we'll have to see. But those are a couple of threats in case the cycle turns, Anushi.
Right. So, but in terms of opportunities also, if we are seeing a handful of now real estate, a lot of headroom for growth, which is still there. This has been spoken with the industry experts also so far. Now, along with the residential business, which already remains on a stronger footing, something that needs to be focused on is the annuity business as well as the hospitality business. Strong plans for the hospitality business in terms of the key addition that they're planning for the next 1 to 2 years. In annuity business also a 4.5x growth that they have planned out for the next 3-4 years. By FY28 they're seeing about a 4.5x growth in this perspective. Now in terms of GDV also, they're seeing about a 50,000 crore plus GDV figures in terms of upcoming launches in FY25. So that remains on a stronger footing. And what needs to be focused on now, currently they have around 70% of their portfolio in the south side of the business. But with the geographic expansion that they're planning in new cities like MMR, Delhi, Goa, Hyderabad and Pune, what remains to be watched out as how this incremental business could aid for the growth of the company forward. So this is in terms of the opportunity pipeline that we are seeing, but there are a bunch of threats also that one should be keeping in mind. Firstly, there have been concerns about labor shortages, increasing construction cost and all. So again, that needs to be something that we factor in. Along with that, delay in approvals, as we've seen in the first half of the fiscal. If this continues in the H2 as well, then FY26 and FY25 guidance numbers remains on a watch list for some of these players. So this is in terms of opportunities and weakness threats that we are looking at.
And let's get straight at it. Let me firstly welcome on board Mr. Irfan Razak. Thank you so much, sir, for joining us. Chairman, Managing Director of Prestige Group, needs no introduction. Mr. Razak, I want to start off by asking you, what's the sense like in H2? H1 has been a softer set of quarters, lots of reasons. Don't want to delve into those. Are you seeing an unwind in Q3, and is H2 expected to be better?
Good morning.
Good morning, sir.
Yes, I see that there are two parts to our business. Like you rightly said, you've analyzed the annuity business also and the residential business. Now, as far as the residential business is concerned, in the first half, we did about almost 7,700, 8,000 crores worth of top line business. Whereas the balance sheet and the P&L account doesn't reflect of what activity we do, because all our profits are back-ended, in the sense that the accounting system is that we have to account for everything on completion. Now that completion, whenever we launch, completion comes 3, 4, 5 years later. So, but the expense is front-ended. That is why you look at the overall, what we call the financial reporting, and that doesn't really, it gives you a very skewed look to the overall operations of the company. But I think we believe we have about more than 50,000 crores worth of sales that we have done, which have not been actually spoken for, in the sense they haven't come into my P&L account. Expenditure has come, but the income has not yet come, because it will be only accounted once the product gets completed and also handed over to the client. That's the methodology of the Ind AS accounting system. I think many real estate companies face the same problem, and we believe that going forward, as and when some of our very large projects get completed, that will show up in the balance sheet and suddenly start looking much healthier. Now, on the operational part, yes, the sales, top line sales in the first half has been little muted against our guidance. But I think we should not look at it quarter on quarter. We are very, very confident that we had given a guidance for FY25 of almost 24,000 crores of top line sales. And we are confident of achieving that by March 25, because there are a lot of the products that are under approval, which need RERA clearance, all of it. Maybe they'll come in this month, or otherwise finally it will happen in December. and that all add up. There is a demand. There's a pent-up demand. Customers are very keen to book, but we can't book till the all compliances are in place. But now we are very, very confident and sure because most of the approvals are in the last and final stages with the RERA being awaited. I think that quarter four, if not quarter three, will be the most robust quarter that we will have for the company and will reach the guidance that we had already guided on. And I don't see any cause for concern as far as we are concerned.
Hi, Mr. Razak. This is Anushi joining in. You've mentioned about, you remain optimistic on the FY25 guidance of about 25,000 crore in your pre-sales number. Now, this is with the assumption that, launches, approvals have come back into picture. So I just want to understand that how Q2 and the second half of this year is supposed to differ. What is the kind of changes that we are seeing in the Bengaluru market, which was not reflected in the H1 performance of the company? So if you can just give us a perspective on some of the key launches that will help with your growth, not just H2 of this financial year, but even the FY26 picture as well.
Now let me come to FY25. In Q3, Q4, maybe we're going to hit Q4. We've got the Prestige City Indrapuram in NCR, which now the property, the plans have been approved. We are waiting for RERA. So that may come into this quarter or may spill over to the next quarter. But that's a 12,000 crore top line revenue that is expected there. And there's a lot of traction. I think once we hit the market, I think the product will do extremely well. We've got the Prestige Nautilus in Mumbai, that's in Worli. Even that is expected to come in Q4. And that approval is also expected in January. And everything is in place. Even our CEC is ready. And for sure, we'll launch that in Q4. Even that will give us a huge amount of top line in sales. And then we have Bengaluru, where we've got the Prestige Southern Star and we've got the Prestige Suncrest. Now, both these have about 4 to 4,500 crores worth of top line sales that will come in. And there again, the plan has been approved. There are two stages of approval. One stage is done. The second stage should get done this week. And hopefully the RERA should come and it will come spill over to the following quarter. And then we've got Chennai, which is the Prestige Pallava Gardens. Again, we are happy that the plans are approved. It's again a process to get the RERA number. Again, that will hit into Q4. And even there's a huge demand and there's a good traction. And that's again a 3,500 crore top line. Similarly, we've got Goa. So if you total all these up, which are the launches which are coming up, and these are the projects that were on top of my mind, which we are focusing on. And I believe that these all totaled up, and even if I sell substantial part of it, which we will, which will exceed, cross that line that we had guided for in the beginning of the year. Now, going into the FY26, it's impossible for me to list out all the projects that are there in the pipeline, but quarter on quarter, they'll keep coming in. And I believe that will also, we haven't yet worked out our numbers. First thing is to reach the guideline that we gave for FY25 and then do the math and come back with a number for FY26. But we have a pipeline, like you already put on the screen, that we've got almost 59,000 crores worth of inventory pipeline that is there in various stages of approval. And if all this comes and if we sell even half of it, that amounts to 30,000 crores. So that's where we are at the moment.
Right. So I want to try and combine another couple of questions. One is to try and quiz you with regard to annuity. You're expecting to grow that business fourfold in the next 4 years. So what will lead to that kind of growth and what's the strategy behind this? Is it to ensure that there's recurring working capital across cycles? What's the thought process? Second, sir, is with regard to the hospitality business and what that unlocks for you in terms of value.
The hospitality business, yes, we have at the moment 2,500 keys which are trading, and we are building another almost equal amount of keys and another equal amount of keys in planning. But that's a separate subject, and we are working on that and how to unlock value there. While coming into office, we are building a fair amount of office space in Mumbai, in Chennai, in Hyderabad, as well as in Bangalore. We already have completed one asset in Pune with 1 million square feet, and we are looking at more opportunities. Now, these, wherever we are building just now, if we interpolate that and the completion dates are around FY 28, 29, and that's the reason what we guided is that by which period, with all the pre-leasing that happens, and the demand for office is still good, the tape cup is good, and we should reach annual top line of 2,800 crores worth of annuity for office. Similarly, we have 3 malls which are trading, which is Bangalore South, Forum Bangalore South. We've got Forum Kochi and the Forum Rex Walk. Apart from the collection in the UB City, we are building another 10 more malls which are under construction. Either construction has started or under planning. All these by FY 28 or 29 should get ready, and this also should get us an annuity of about 900 to 1,000 crores. So this is the game plan. The numbers are there, and we have the lands are tied up, construction is on, and hopefully by the end FY 29, when these assets are ready, we'll try and see how we can unlock value for these assets, either through a REIT or a stake sale or whatever happens at some point of time. But we are managing the malls, and we will continue to manage the Forum brand. And our ultimate goal would be to REIT these assets separately as a retail REIT as well as an office REIT.
Okay, thank you so much. You've broken this down, in very simple terms for us, Mr. Razak. Thank you for coming in, speaking with us.
My pleasure.
On this show of KYC. But that's all the time we have for this edition of KYC. Stay tuned for more on KYC. We hope you found this productive. From Anushi, myself, everyone who puts the show together, thanks so much for watching. Stay tuned to NDTV Profit. More action on the other side.
Neeraj, by the way, let me compliment you and your channel. I find very insightful discussions. Even, if I have to know more about India, those are the discussions I hear, right? So kudos to you, Tamanna and Samina. I found it very, very insightful all the time.
We set you up for the day's trade. 30 calls before the markets open on NDTV Profit.
Jubilant food above a 600 level on Friday.
Wipro can be first to buy
all commodities, but in that Vedanta looks good.
Our experts give you the top stock ideas to prepare you for the day.
ICICI Lombard stocks hit the first target.
It has given a very good momentum with good volume.
Don't miss the chance to make the right moves. Only on NDTV Profit, where winners are made before the bell rings.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Long Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Long Street deals, finance and policy news that could shape your tomorrow. the newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Log Street deals, finance and policy news that could shape your tomorrow, the newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Neeraj, by the way, let me compliment you and your channel. I find very insightful discussions. Even, if I have to know more about...
Hi, thanks so much for joining in. You're watching Hot Money on NDTV Profit. That's Puneet Zaveri with me, and I'm Alex Matthew, and we'll take you through the next 1 hour of trade. And let's take a look at how the markets are faring. Season's greetings, first of all, if you're joining in for the first time today, from all of us at NDTV Profit to you and your families and your teams. Let's talk about some of the themes that we will discuss on today's show. First up, what's hurting the demand for the paint sector? That's something that we've got lined up for you. There's been pricing pressure and there's been increased competition. That's one thing that we're discussing, and what you should do if you are holding any of these stocks. Let's also talk about capital goods, which are under pressure based on the latest update from Siemens last week. It's an outlook on their orders. Brokerages have come out and cut their targets on Siemens, and is that something that will affect the rest of the pack as well? That's something we'll discuss on the show. A deep dive on Dr. Reddy's Laboratories, what's working and what's not for the company, and also how it stands as part of that pack in the pharma space. And finally, we'll talk about contract wins that have been in focus. A few stocks really doing well in trade on the back of contract wins. And we'll also slip in a conversation about telecom. The latest data from the Telecom Regulatory Authority of India on the subscription data has come through, where there has emerged some interesting information on the loss of subscribers for Reliance Jio on a gross basis and an addition by Bharti Airtel. Let's very quickly take you through how the markets are faring right now. And you have the benchmark Nifty 50, which is gaining about a 0.9% or thereabouts at very close to the high point of the day, lost about 0.2 percentage points. And the mid-cap index has actually gained quite substantially over the last 1 hour or so. It is now with gains of about 0.5%. Small cap index is down about 1/3% or so. So a little bit of pressure at the broader end of the spectrum, but you see a little bit of a relief, at least for some of these large cap names that have been under pressure on the last couple of sessions. In particular, Friday's session was a bit of a beating down for some of these stocks. All of the sector indices, or rather most of them, are in the green as I see the screen right now. And you have the realty index that's leading the pack up about 1.5% or so. Metal also doing particularly well. Interestingly, Puneet, the Nifty Bank has been participating in trade today, up a percent or so?
Well, definitely, but let's now move across and see the first theme that we have today. It's the paint stocks which are under pressure on the back of demand slowdown in the sector that we've seen. Now, Mahima joins us now to break down what's going on with the sector and what are brokerages as well saying. Mahima?
Right, so paint sector has remained under pressure in the first half of FY25 and brokerages have reckoned that this will continue in second half also. Considering a couple of factors playing, its role in, slowing down the demand. The first one being that demand is not just hurting, the big cities, but it's not just in the painting space, it's overall in the consumption space. We've seen that the FMCG urban market is about 1/3 of the total market and seen a 2.4 times slowdown, and this is because of surging housing cost as well as lower wage growth. Now, in terms of the other factors, entry of new player has initially hurt the market leader, that is Asian Paints. Asian Paints dominates big cities and hence suffers more. Berger Paints on the other side is present in the tier 3 and tier 4 cities, and hence it is less affected by urban slowdown as well as Birla Opus, because Birla Opus is currently targeting the tier 1 and tier 2 cities. Indigo on the other hand has been an outperformer and it has seen a 2 to 3x growth as compared to its industry peers, and this is because of its differentiated products as well as its presence in tier 3 and tier 4 cities. Now, in terms of how Birla Opus, the new entrant that is kind of bringing the competitive intensity into the markets, is faring out, where Birla Opus has garnered around 2 to 3% market share, and as per the conversation that we had today with Berger Paints management, he said that it has garnered around 3 to 4% market share. It aims to achieve a high single-digit market share by FY25. And lastly, the total capex spend right now stands at 85% of the total projected cost. Now, in terms of the competition hurting established players, Berger Paints has said that it has lost around 1.5% growth due to competition, and dealers are earning 7 to 8% incentives from Birla Opus versus that of 3 to 4% from Asian Paints and 5 to 6% that of Berger Paints as well as AkzoNobel. And Birla Opus selling price is 5% lower than that of Asian Paints. Lastly, what are these incumbents aiming at to retain their market share? Well, they are raising, they're kind of raising their rebates by 2 to 3%. They're offering higher incentives for project businesses. They're also extending these incentives to dealers even if targets are not met, and they're matching higher cashbacks offered by Birla Opus and improving their service levels. And lastly, Berger is now focusing on the metro cities. So this is the overall view as to what is happening in the entire paint space and what's the outlook going forward.
For laying that out for us. That's a perfect opportunity to introduce our guest today. We've got Shalibhadra Shah, who's a CFO of Motilal Oswal Financial Services, and Sharmila Joshi of sharmilajoshi.com. Thank you so much to the both of you, and thanks so much for taking the time. Compliments of the season to you and your families. Mr. Shah, I'll come to you first. What do you make of the space? We just kind of tried to lay out the context for you to tell us how you view these paint stocks. Asian Paints, favorite for most portfolios, down 33% from the 52-week high. What would you do with this? Mr. Shah, I think you might just be on mute.
Yeah.
Yeah.
Now, good morning. I'm joining on the capital market side.
Okay. Okay, let me just try and figure this out. In the meanwhile, let me go across to Sharmila Joshi. Sharmila, can you give us a sense of how you see the paint space? Like I was saying, Asian Paints down about 33% or so from the 52-week high. People still holding on to patience, thinking that there might just be a